Well, it may not be the retail doomsday scenario of the past, but there's definitely a shakeup happening in the corporate world. According to our research, as of 2023, a total of 2,373 stores across the United States are set to close. And the reasons behind these closures vary. Some companies are grappling with bankruptcy, while others are aiming to trim costs. Many are adjusting their store formats to adapt to shifting shopping trends. Leading the pack in store closures is Bed Bath & Beyond, which declared bankruptcy and closed a staggering 896 stores across its three brands this year. Following closely behind is Foot Locker, which is shuttering 545 stores across two brands by 2026 as part of its strategic shift away from shopping malls. Let's take a closer look at some of these major companies and their decisions. Bed Bath & Beyond, this retail giant, filed for bankruptcy and permanently closed its stores on June 30th. While the brand lives on digitally after its intellectual property assets were purchased by Overstock.com for $21.5 million, the closure affected a total of 896 locations this year. As of February 26, 2022, Bed Bath & Beyond reported having more than 32,000 employees. As impressive as that may seem, it had more than 55,000 in 2018. Foot Locker. In March, Foot Locker announced plans to close up to 420 stores by 2026, primarily in shopping malls, having found that 400 U.S. stores in malls make up less than 10% of the brand's total sales. Simultaneously, they aim to open over 300 new concept stores, including locations outside of malls. New concept means community-focused concepts, which will be located in communities that are drawn to sneakers, while its Power Store concept, which provides an elevated experience, will be located in high-traffic streets and in malls. Its House of Play store, on the other hand, focuses on quality product presentation and storytelling. Tuesday morning, this Dallas-based home goods company decided to shut down all of its stores following earlier plans to close more than half of its stores amid bankruptcy proceedings. It's the second time Tuesday Morning has filed for bankruptcy protection in the last 3 years. In 2020, the company closed more than 200 of its nearly 700 stores as it was hit hard by the pandemic. Walgreens, while the pharmacy chain didn't specify which stores would close, they plan to close 150 locations in the US and 300 in the United Kingdom, as disclosed in their third quarter earnings call. They will also be laying off more than 500 employees after they settled a lawsuit with the city of San Francisco, agreeing to pay it $230 million over its sales of opioids that have contributed to the Bay Area city's drug crisis. Christmas Tree Shops, this seasonal specialty retailer based in Massachusetts, filed for Chapter 11 bankruptcy and is closing all of its 16 locations. Christmas Tree Shops took out a $45 million loan, but creditors terminated it after the company defaulted on the terms due to worsening revenue and liquidity. Bath & Body Works. While expanding with its new standalone stores, Bath & Body Works is closing approximately 50 mall-based stores, impacting U.S. malls that are losing legacy tenants. Gap and Banana Republic. Parent company Gap announced plans to close around 350 Gap and Banana Republic stores by the end of 2023, with some already closing this year. Other stores include Party City. After announcing 22 store closures in February, they added 9 more to the list in April for a total of 31. Walmart is closing 22 stores across multiple states due to poor performance, along with both of its remaining pickup-only concepts. Best Buy plans to close 20 to 30 large format stores while opening smaller concepts and outlet locations. The specific locations are yet to be disclosed. Lidl, the German discount grocery chain, is closing 11 underperforming stores in several cities. Amazon has shuttered 9 of its Go stores as they reevaluate their physical store strategy. Big Lots chain is closing 3 stores in California and 4 in Colorado as they shift focus towards small towns. The RealReal, a luxury consignment marketplace, is closing 4 stores and 2 consignment offices across the U.S. to cut costs. Macy's plans to close 125 locations. Macy's is shutting down 4 stores in California, Colorado, Hawaii, and Maryland during the first quarter. Target will close 4 stores. JCPenney will close 2 stores this year in Oswego, New York and Elkhart, Indiana, following the closure of over 150 stores in 2020. Believe it or not, this is just half the story. Almost all organizations for retail stores swear that there are more stores opening than there are closing. Vicki M. Young reported in the online publication Sourcing Journal that there are 5,396 stores that opened this year, and more than 2,600 are apparel related. Young said that this means the store concept isn't dead and people still like shopping in a brick and mortar environment, but there is a shift in what they're looking for, she said. The retailers with the biggest expansion plans are the dollar stores and deep value chains. Discount chain store Five Below plans to open 200 new stores, the most aggressive expansion plan in the company's history. Dollar Store is opening 650 stores. Backstory, also a dollar store, plans to open 200 more stores. Sam's Club is also planning to open 30 new stores across the country over the next several years. McDonald's, what people consider to be the dollar store of fast food, is opening 1,900 doors. The National Retail Federation, or NRF, also predicts that smaller footprint stores will flourish as retailers experiment with new formats. Over the next 4 years, Kohl's plans to open 100 new smaller format stores, and Sephora will open smaller shops in 850 Kohl's locations in the coming year. These shop-in-shops cater to customer convenience by decreasing the number of stores shoppers have to visit in order to purchase what they need. Quantitatively, it seems openings outpaced closings, but the business of these discount stores and smaller stores translates to less products, which translates to less jobs. If Bed Bath & Beyond lets go of its 20,000 employees and closes 365 stores, even if Dollar Store manages to open 650 stores by the end of the year, it will not offset what the economy lost. Yes, a huge part of this is the changing retail behavior of the customers as influenced by technology and economic occurrences like COVID. But an even bigger factor is the inability of the businesses and government to anticipate such evolution and prepare our economy for it. The solution is often the manipulation of numbers to reflect a better economic condition than what we really have. That kind of a strategy only benefits political interests.